Welcome to the Broken Pie Chart Podcast, episode 356. I'm your host, Derek Moore. With me once again is Mike Snyder and Shane Skinner. All right. I guess we have to figure out what we're doing next week. Maybe we'll record before the holiday. All right. Anyway, that's for us to decide next week. This week, let's start with Tesla. Shane, you and I were talking today, and we noticed that Tesla options. So we were looking at some covered call spreads, that type of thing. And we noticed that you can sell things very, very high out of the money. And you made the comment about Tesla's volatility. I pulled Tesla's vol and I looked at the 1 month 100 moneyness. So 100 moneyness just is a fancy way of saying the at the money implied volatility for options, 45%. And if you look at the chart, Shane, I mean, it's not as low as it was in 23. It's certainly not as high as it's been, but I expected it to be higher. Does this surprise you?
I think with the strong rebound it's had recently, maybe that serves as why it's not as big. But I mean, still, if you're looking at going out, it was something like, what did we see 2-3 months out? You go 50-60%, and you could get like a 4 to 5% annualized return on a covered call there. That's really far out of the money to still be able to get 4 to 5% on something. I don't know. It's, to me, being able to still get that much, whether it could be higher or not. I'm sure it's going to get higher because, remember, earnings are in January, and we were looking out in January, February, March. So, I think over time, as we get closer, that might continue to rise. We'll see. I also think that there's some stuff going on in the private space. I think you mentioned earlier with like SpaceX and other things like that, naturally, I think Tesla benefits from stuff like that. So maybe vol's damp and it's caught a little bit of a bid. We'll see what happens with the stock coming into the new year.
Mike, these are famous last words like, oh, that seems too high. Like that's 60% out of the money. And
Yeah.
I mean, it's there for a reason. And implied volatility is really saying it's not making a market call, right? It's just saying the expectations from the options market is the higher the implied volatility, the higher the expected ranges, right?
Yeah, exactly. You saw that call and you think, oh, I would love to see my stock get there. There's no way it's going to get there, move 50%. But anytime an option's priced this way, you need to remember there's a reason it's priced that way. And that's because there's not a zero chance that it gets there. Someone's betting that it will.
Someone is betting that it will. I mean, I'm looking at Tesla's forward PE. So unlike NVIDIA, which as it's gone higher in price, its earnings estimates have gone up in price, and its forward PE, used as a proxy for valuation by many people, has gone lower. Tesla's forward PE, if I'm looking on Bloomberg right now, it's 220.3297. So 220 times forward 12-month earnings. That's higher than Apple, Google, Microsoft. That's actually pretty high. So the market's it's sort of made a new, I'm just looking at a 5-year chart, a new 5-year high. And yeah, forward PE is rising. So this has been, a market multiple event here. If I look at the earnings, I should have brought the actual earnings here, and I'll do it on the fly. Yeah, I mean, earnings estimates on a forward 12-month basis are actually coming down. So this is one of those things where the buyers, or I'll say, the street is saying, yeah, earnings are coming down, but we're willing to pay more for the stock. So this has been a multiple expansion. Multiple expansion meaning how many times forward earnings are you willing to pay? Earnings estimates are lower than they were, back and if you look at like mid 2022, their forward earnings were something like, I don't know, like 5.75 a share, and their forward earnings right now over the next 12 months 2.18. So look, we'll find out when we find out on this, but I just thought it was interesting to look at that. We talked about Nvidia a couple weeks ago on how it's been going up in price, and the forward PE has been coming down. All right, the other story this week is really CPI. We finally had CPI again, and there's a missing. Like if you look at a bar chart, it's like it's missing a tooth. There's no October number. We do have the November number. It surprised analysts. 2.7% year over year growth rate on CPI. Core CPI 2.6 year over year, and that was, especially that one was pretty far under the analyst estimates. If you look in the report, some things that sort of struck me as food year over year was 0.35%, energy 0.27%. I was actually a little surprised that energy was not flat. Core goods 0.25, core services 1.87. And then you look further down and you say, well, what else is sort of driving things? And shelter. Shelter has been coming down, I should say. And that's continued over time. Charlie Bolello had tweeted something, and he talked about how asking rents, are down something like 1.1% year over year. I think this is, I don't know if where he's sourcing that from, but then shelter CPI. And if you look at these two, you would say they're both going lower. And he makes the comment, shelter CPI has moved down from a peak of 8.2% in March of 23 to 3% today, lowest since August of 2021. Given its long lag versus real-time rental data, which is minus 1.1 year over year, a continued move lower is expected. Okay, I see what he's doing here. He's saying the real-time rents from apartment list, that's the source, down 1.1, but shelter is still showing up 3%. So, like Mike, you look at this and you would say, first, and we've been saying this, there is no inflation so far from tariffs, at least in the data. And the second thing, I think the point that Charlie is making is it still should come down more if you believe the lag effects and you believe that real-time rents, which are negative 1.1 versus shelter 3. So, Mike, do we see a 2% handle in the next 6 months on CPI?
Could. Yeah, I mean, it seems like it could be trending that way. I agree. I mean, the inflation that everyone was at some point scared about from tariffs doesn't seem to have happened. And we keep saying yet, but we really haven't seen that yet. And it's interesting to see the rents and the shelter year over year changes and sort of how the rents are a leading indicator relative to the shelter CPI, and probably expect that to continue to come down. I mean, rents also went up a lot more than shelter did, in 2021 when it spiked up to a high of 18.2%. So you would expect that to probably correct faster. But it certainly seems like it's trending that way.
When you look at lodging away from home down 4.1%, rounded there. Shane, I mean, this is one of those things too, and I made this point before, that the COVID period really just screwed up everything. And you have these anomalies because, of course, the economy was closed. Everyone all of a sudden wanted to travel. Hotels, I think hotel rates are 3 times what they were pre-COVID. But we've had this steady kind of easing down. And it looks like either people are like, okay, now I'm all traveled out, or I mean, Shane, is this sort of a precursor to people don't have the money, or they're worried about the economy, so they're not traveling? Or maybe it's just things are easing post COVID finally.
I think it's a combination of both, and like it's the chicken or the egg, right? COVID definitely was a kink, and I think the plumbing and just the overall like global financial system and global economy, in the U.S. economy, right? Um, we did a lot of money printing. I shouldn't say we, the central bank, right? The Fed had to print off a ton of money for a multitude of reasons to keep everything flowing. And I think what this whole like period has been is just the playing out of like there was COVID. We ended up printing a bunch of money to make sure everything continued to run smoothly and nothing fell apart. There was that burst of inflation early on. And since then, yeah, I don't feel like food prices over the past 6 months, personally, for myself at least, maybe even longer, um, I don't think they've really gone up at the store. Maybe some things here and there, but I've seen some pretty reasonable discounts, stuff coming back down into an area and a range that seems pretty consistent. And so, you know, I just
So I disagree on some of the food stuff. Like if you buy a package of chicken breast, I think it's 75 to 100% more expensive than it was in 2019. And there would have been, I mean, prices go up over time. So when people,
absolutely. Oh
but
yeah, there
I
was a
think
huge shock.
no, I mean, I think things are at and it happened, late 70s, early 80s, like prices really jumped, but they never go back down. You look at 2008 is really the last time that we had a negative year over year inflation print. And you got to go back to, I think, the 50s, late 50s, mid 50s for the last time that happened. So now, but I think prices are up. But maybe what you're saying is, Shane, that since that initial burst, I mean, they're kind of stabilizing.
Kind of plateauing. Yeah, yeah, that's more of a it's like a stair step if you were to think of it on a graph. It's not a slope line over that term structure. We pretty much went up straight in a matter of a year or two, and then yeah, we're sort of easing off. So if we can continue to ease off, hopefully that doesn't really put any more pressure on the consumer. It's I think a good sign. We'll
I,
see.
yeah, I think a lot of businesses had an opportunity to test new pricing with consumers without it being, we're jacking up prices, right? There were supply chain issues and you weren't able to get certain products. And so inevitably prices went up and consumers were still willing to pay those prices. And now it's like, when do we lower prices? Why would we lower prices if people are still willing to pay them? But I think at a certain point, maybe there becomes some fatigue there. Um, like Shane and I were talking a few weeks ago, a very specific example, but buffalo wings at this place in Chicago. I remember they like tripled in price because they just couldn't get them. And I've been back there since. The prices have not changed. There's no more supply issues. There's not a shortage, but people were still buying them. So they're still the same price.
I mean, what you're describing, Mike, is kind of the elasticity of price. That Econ 101 thing where it's this idea of some things, if you raise the price, demand goes down, or people look for substitutes. I mean, that's Econ 101. And then there's other things that are more elastic, meaning as prices go higher, demand doesn't go down. Like when fuel prices rise, and maybe things are a little different now, but people weren't like driving. I mean, like, oh no, maybe I'll take the bus instead of driving to work, even though it takes me much longer. And when prices are really low in for gasoline, it's not like you fill up your car and you're like revving your engine driving around the neighborhood for 3 hours because you can. But you bring up a good point. And look, margins are higher. We've been seeing this. I mean, the forward expectations in the S&P 500. I don't know if there's any chicken wing companies in there, but I mean, it's 14.4, 14.3%. So yeah, I mean, I think you test it and you see if it sticks. But this goes back to the whole idea of prices never really go down. And I was having this discussion the other day with somebody, and they're like, I hope inflation eases. And I said, well, it has. We're back to, at the time it was 2.9% year over year, but now it's 2.7. But they were like, no, but they're still high. When are they going to go down? I'm like, they're never
They're
going
wanting
down.
deflation, right?
Yeah, I'm like, they never go down. They
Yeah.
always just go up. It's the rate of change, how fast they go up, that changes. So, um,
When's the last time we had a deflationary event, like a true deflationary event?
well, oh 08. I mean,
Oh wait.
look, if you look at CPI, that was a negative year over year. And you'd have to, I mean, the Fred data is the FRED if you just Google annual CPI year over year. But when you think about deflation, that is where, I mean, you need a true longer recession. And that's where everything goes on sale when there's no demand, demand side issue. But, it's probably oh 08, oh 09 was really the last one.
So
And,
again, it's a liquidity constraint. It's just there's not one side of the market to support the other.
and as we know, I mean, you mentioned government print, the Fed printing money, but it was really the government during and after COVID with these massive infusions of cash. I mean, people forget it was the stimulus payments, what, 2 or 3 rounds, I forget. It was the disaster relief. It was the what was the payroll protection, the PPP. Then there was childcare. There was like massive amount of money, and that's the thing. You look at, there's some really good arguments for a guaranteed basic income. I'm always like, we kind of just did that. Like, you could give everyone $1 million, but prices would go up because the purchasing power goes up. So, all right, but back to inflation though. I mean, it's inflation rarely stays at 2% or plus or minus 2%. So, like, to me, I mean, if it's 2.7, if it's 2.9, I mean, the difference between 2% inflation and 3% inflation is actually a little bit significant, especially if you're looking at retirement planning and those types of things. But it's not 5, it's not 7. And yeah, so do you want to tell us what Buffalo Wing Place this is, Mike, or you want to keep it to yourself?
Save it for the
Uh,
recommendations. Save it.
yeah, I may need to keep that one.
All right.
Why not?
Let's talk about number of news stories mentioning Bitcoin and gold. Liz Ann Saunders said news stories. Let's see. Yeah, they kind of spiked end of October, beginning of November for gold, and those are down. I mean, look, I don't know what's going to happen with gold. If you want to buy it, you buy it. If you want to short it, remember, you have unlimited loss. But to me, the fact that people aren't searching as much for gold tells me it could run a little bit more. I could be wrong, Shane. I mean, but you look at, I mean, Bitcoin is what, 88,000, 85,000. I don't know what you would have closed today.
Let's take a look. Yeah, I mean, realistically, yeah, Bitcoin 87,920 as we sit here at 345.
What if it sits, Shane? What if it sits here? What if it just trades between 80 and 100,000 over the next 5 years?
I don't think. It's funny. Mike sent me a while back. There's something I think JP Morgan's working on, and obviously this isn't a recommendation, but it's something to do with like a 2-year play on Bitcoin. It's a structured note. It's like if it's down X amount over the first year, but then up the next year, you can make insane upside. It's something crazy. I think you're seeing a lot of structured products being built around Bitcoin. I think that means there's a lot of options now being traded around Bitcoin, and spot is something that gets used to hedge it. And so I think it's just becoming more commoditized or more. It's more systematic or built into the system, if you will.
I
So
mean,
because of
we
that,
do
it seems
that.
like flows. Yeah, yeah, absolutely.
I mean, we create a buffered sort of exposure to. We do it both for Ethereum. We do it for Bitcoin. Where basically we're sort of saying you have, for the first X%, or there's a portion of the downside that's cut up, and then I mean, the cap, because of the volatility, you can put a cap that's very, very high. But I mean, we've done those for clients or for advisors clients. So I don't know, Mike. I mean, I think the reason why Bitcoin, I mean, Is it a crazy prediction to say that maybe it just stays within 85,000 to 100,000 over the next 5 years? Because you've got these natural flows now because people are very quick to sell ETFs. So I don't know. Look, I haven't decided my prediction yet for 26 on Bitcoin. I've been wrong every year because every year I think I put it at like $1,000 or something, but
Yeah, I
maybe
think
it's matured.
yeah, it seems like it has matured more. Um, this more than any other period is a period I could see it trading sideways in this range here. Still up a ton over the last, you know, 10 years, obviously. Will people get sick of it if it just sits here? You know, I think some people will. I think this is an asset that people buy and expect it to go up instantly. At least, you know, they did a few months back. I don't know about right now in this moment, but I think it has matured. I think there are a lot of ways to gain exposure to it and a lot of ways to get out of it. Yeah, I mean, as things grow, they tend to have less volatility as assets mature, and Bitcoin may be entering into that stage.
I looked at gold and I'm just pulling up a 5 year chart. End of December in 2020, it was around 175. You go to December of 23, and I'm using GLD, by the way. So, December of 23, it's like, I don't know, 180, 189, 190. It kind of went nowhere for a couple of years. And to your point, like people might get bored. Like, oh, it's not going anywhere. It's not doing anything for me. I'll just get rid of it. I don't know what point that is. I go back to Bitcoin though, and I'm still trying to have anyone tell me what major problem that Bitcoin has solved. I get it. It's something that can be traded. It has flows. It has momentum. It has more buyers than sellers, more sellers than buyers. It affects the price. But I really don't. I really haven't seen a use case for it.
So barring quantum cracking it, I'm just gonna throw it out there. Barring quantum cracking it, there's a maximum supply on it, right?
I guess unless they
I-
issue more.
if the supply schedule is transparent, rule based, and can't be altered by any country, um, and there's no discretionary issuance from a major country behind it, then holding Bitcoin might hedge against USD debasement over long-term horizons. So in a way, it might act as a counterweight to other
But
countries'
what do you mean
currencies
by
with
debasement?
expanding
Do you
money.
mean not keeping up with inflation, or do you mean because I don't think people? Sure, if you put your money under a mattress and don't get a return on it, yeah, you're going to lag inflation. But you could
Right.
put cash into treasury bills. You could put them into treasury treasury inflation protected securities, tips, bonds. Like I'm arguing against it. And I'm taking the other side to sort of have a discussion, but I've yet to be convinced on this stuff.
I think only time will tell with this. I think that's another thing. Maybe Mike, you'll agree. I think the price of Bitcoin or people's willingness to really jump into it. Um, I think there's some shock at how it stalled in the hundred or low 100,000s and it's pulled back down and has stayed below 100,000. And I think also there was an expectation that the current administration in the U.S. was going to be extremely um, supportive of it, and I think they are to an extent. And I think that there are things being done in the tax space to be more friendly to it. Regulation's been fairly friendly, it seems like, but I mean, I think people were almost looking for like a full blown endorsement, right, from the Treasury or the White House on collecting it or using it in some aspect. And I think that that's what the market's almost waiting for. Maybe I'm wrong.
Mike, I mean, I guess when I think about, yeah, I mean, to Shane's point, the belief was that maybe the US would start like a sovereign wealth fund. They would hold Bitcoin. That works, Mike, if you don't have really, really big debt. Like we don't have excess funds.
Right.
We're in debt.
Yeah.
So,
You can borrow money to put it in Bitcoin.
Or
yeah,
borrow money from ourselves to buy Bitcoin.
I
Yes.
mean, isn't that what MicroStrategies is doing, right?
Hey,
I mean, I don't
Yeah,
know.
I don't know. I think, I think there are people that really believe in it and will argue its use case. I think that use case, well, yeah, maybe it plays out is way too far away, right? Because it's still so correlated with other assets that I don't think it really should be correlated with. Like it's very correlated with the market.
Yes.
And if it's going to be what everyone says it's going to be, that shouldn't be the case. So in some ways it feels like it's matured, but in the way it acts relative to the market and what it's really supposed to be, it feels like it's really early at the same time, or or maybe the end. I don't know. So
I don't think it does anything though. Like it's like a kid getting a toy for Christmas and like what does it do? Can it dance? Can it sing? Like it's not a currency. I'm sorry. It's
oh,
not
and
used
there's
as a currency.
right, and there are people that will never touch it because they feel that same way, or they just don't even believe in it. I mean, my dad and my grandma, I think 3 4 years ago, coming home for Christmas one year, we're all in the car, and they all just said they're like, I won't touch it because I don't understand it, and I don't really care to. And sure, did they miss out in some aspects? Maybe, sure, maybe not. It really, at the end of the day, that's another thing I think Derek or Mike, you guys would agree is if you don't really understand something, um, I, I don't know if it's worth
Well, look, I
investing
could have
in.
bought it at $1. I remember when it was
Yeah,
hearing people
of
tell me
course.
about this. And back then, you had to, I mean, to acquire it, you had to do these equations on a computer. And if you did get it, you had to put it in like a separate, file. And if you lost your hard drive or whatever, it was lost. I mean, that type of stuff. But yeah, in hindsight, should I have bought some at $1? Yeah, probably. I'm sure there are other things that came out that are worthless now. But all right, we're gonna lose half our audience. We'll save Japan for later. Let's go back to the markets. So far this year, if you look at Liz Ann Saunders had posted returns based upon sector. So I'm kind of skipping around here in the Word document. And if you look at this, you're like, okay, communication services, no surprise, up 30% year to date. I shouldn't say it's no surprise, but the fact that it's leading, it's no surprise. And I think Apple's in there. Isn't Apple in communication services? I got to look. Infotech, yeah, up 20.6. Not really surprising there. Those two have led. But then you sort of look and yeah, like industrial is almost up 17%. Utility is up 13.2%. Financial is up 12.5. And then real estate and energy are the two ones that are kind of lagging with real estate, lower. So I mean, I don't know if there's much discussion on this. Just I think utilities, when you look at that, that's a little bit of a surprise. And I think industrials is kind of a surprise. But Mike, anything here that
Yeah,
kind of stood out?
I'm surprised just on the surface to see industrials, and then I think about the companies, and I'm like, oh yeah, those companies are all doing very well, like GE Aerospace, Caterpillar, uh, just to name a couple I know have sort of been running recently.
Do you think that I mean, you look at this, and if you were contrarian, you'd say buy energy, buy real estate, right?
Right.
So is that what you're doing? Is that 100% of your portfolio next year, Mike?
It's not.
It's not.
No.
Okay. All right. Just checking there. I mean, but you look at so consumer discretionary and consumer staples. Consumer discretionary 7.2% year over year, and where is staples 2.6. So you remember at the beginning of the year, people said, well, buy staples because we could be slowing, and consumer discretionary is lobsters and Porsches. I'm making a joke here, and staples is like toothpaste and toothbrushes. So I mean that this goes to show you that, I mean, all those people who said, yeah, I mean, things are going to have a rough year. The Mag 7 isn't going to do well. You know, tech stocks are going to finally take a break. Shane, that has not happened. Staples, energy, and staples, energy, and yeah, and real estate, kind of the
Yeah.
worst performing stuff.
Yeah. I don't think so. Energy, real estate, that doesn't necessarily surprise me. Staples, I'm not saying can't grow, but one thing I think most staple stocks, don't they pay dividends now, right? They're
Mm-hmm.
slow movers typically. And I'm not saying there is an opportunity in those names necessarily, but when I think of growth, I don't necessarily think of, toothbrushes, right? Sales. I think of more expansive stuff that's driving large amounts of investments. And, um, I'm not surprised to see tech doing what it's doing here. The one thing that does surprise me is utilities. It's not so much utilities performance year to date. It's actually how it's done month to date so far since the screenshot.
Mm-hmm.
It's given about a quarter of its gains year to date back, it looks like.
Yeah, down
Um,
4.9% month to
yeah,
date through
almost
the
five.
18th. Yeah.
Yeah, a little over a quarter, it looks like. So, um, yeah, I remember at the beginning of last year, I was still working at Schwab, and there were plenty of people I talked to that insisted, um, hey, you might need to go into something safer. You got to be careful this year. You don't know what's going to happen. And tech's had its way again.
I'm looking at, I'm using State Street's sector spiders as a proxy for some of these. So communication services is up the most. That has Meta, Google / Alphabet, Warner Brothers, Discovery, EA, Netflix, Walt Disney. And then you look at the XLK, which is technology. That's got NVIDIA, Microsoft, Broadcom, Palantir. Apple's in that twice, huh? Okay. Cisco, Micron's. Micron was just up 15%, right? Over in one day. So yeah, I mean, I guess you have to put, I mean, some of these companies too, like Apple, I mean, where does it fit? It's almost like a consumer staple, to be honest with you. You can make an argument you put it there if you don't want to have it in tech.
Yeah,
Yeah,
I
it's
guess a
become
phone
a
is
tech bubble.
a necessity, right?
It
Right,
is, and all the
right.
subscription. I mean, Mike, you think about if you have an iPhone, you're sort of locked in. You need the storage. You probably have the Apple Music. You do the bundle there, right? I mean, it's just a recurring thing that you pay.
Right. Yeah, it
Is
could
this a
fit into a few of
prediction?
these.
Apple starts paying a dividend 10 years from now, becomes more of a
But
slow
I mean, it does
mover.
pay a dividend. It's just not that high, right?
Uh, it's
Um,
it's a good point.
let me look at Staples. So Staples, some of those companies that are in there. So Walmart, Costco. By the way, Walmart, we talked about that a few weeks ago. Forward PE, that's second to only what, Tesla in like the top 20 companies. So
Right.
yeah, Walmart, Costco, Procter and Gamble, Coca-Cola, Philip Morris, PepsiCo.
All
Number
great companies. Don't get me wrong.
Yep,
Use
you
their
going
stuff.
100 loading up you doing leverage, triple leverage to all those? Got it.
Yep.
Um
I mean, their products.
no, I mean their products like Walmart is kind of like consumer staple-y, so is Costco, Coca-Cola. I mean Coca-Cola has a lot of stuff, not just their sodas. So, all right. Utilities, I mean that's definitely an AI thing. I suppose if you have demand that's coming in and they can sell more energy, but a lot of those are regulated. So, all right. Let's talk about analyst forecasts, and then we got to talk about SpaceX and some flows to an ETF. But first, where's my thing here in the document? Liz Ann Saunders had posted a chart on Twitter, if I can find the chart, and it was basically that markets. So this is long-term forecast revealed substantial gaps from actual performance. So the mean, what she's got is a bar chart here, the mean 10-year S&P 500 performance forecast, and then the subsequent or the actual 10-year S&P annualized performance. So, all right. So I guess, when it says 2024, I guess that would have been the analyst prediction they made in 2014. And then the blue bars, the forecast they made 10 years prior. And then the orange is the actual what they happen. That's the only way this chart would make sense. So 2008, 2009, yeah, I mean the subsequent 10-year. All right, this already isn't making sense to me. Okay, no, it is. So they thought the 10-year ending, let's say 2008, would have been more like 9%, and the 10-year actual wound up being like minus 3.5%. Is that how you guys read that?
Right. The performance of the market the prior 10 years leading up to that.
Yeah, and then the analysts thought it was 9.5%. So Mike, I think our point here was that a lot of times companies or investment banks give like the forward, like annualized return expectations over the next 10 years. And what she's saying here is that a lot of times they, at least since let's say 2018, they have underestimated the forward returns. They overestimated forward returns really from 01 until 17. So
kind of makes sense when you line up the 10-year period there, right? 2018 would have been 10 years after 2008 when it seemed like everything was collapsing. And so probably the next few years after that, the estimates are naturally going to be a little bit lower.
But the blue, I mean, yeah, because here's the thing, like in 2013, that expectation was a 2003 expectation for over the next 10 years.
Right.
If I'm reading this right. So I don't know. Maybe
so that's coming out of the dot-com bubble a bit. I mean, I guess that's a couple years after, but I guess those types of events seem to stick around a few years later in terms of how analysts forecast.
What would be interesting is if, and this chart is from Dow Jones, Federal Reserve of Philadelphia. It would have been interesting to see like what the forward estimates are for like 25, the 10-year forward.
Mm-hmm.
I'm just going to make a call out here. I mean, these still look almost abnormal, right? In the past 7 years, roughly 8 years, right? Almost the past decade now have been fairly large returns relative to the past 20 years.
But this is the expectation. Like, look at 2021. I realize the audience,
well,
the
I'm
audience can't
talking
see
about
it.
the actual, sorry, not the
The actual 10-year, the
performance.
annualized.
Yeah, not the performance forecast, the annualized performance in orange. I mean, I guess where I'm going with this is like in stats, right? Over dispersion, or is this like a distributional shift? Like over dispersion meaning, is this something where we're just seeing clustering, almost like we're just on it's just a larger tail distribution taking place here where the market's been returning more than 10% annually for the past few years now, consistently, or less than 10% in 2022 versus is this something where like maybe this is the new norm? I don't know. I don't want to be the one to say this time it's different, but at the same time, what do you guys think?
No, I mean, I'll tell you what's different, Shane, and that is we haven't take out the 2020 recession, which was all of like 3 months.
Okay.
We haven't had a real recession since 08, 09. Like Mike, when you look at that, barring recessions, and we know that markets when they go up, they typically go up more than the average. I mean, we just haven't had a recession, Mike.
Yeah, and when there's not a recession, we looked at those returns last week. I think when the market's up, it's not up 7, 8, or 9%. It's generally up a lot more because when the years that the market's down, it's down a good amount. So when the market does well, it generally, like I think Shane, you said clumped. It's sort of, the returns come and they're more than the average, and that's sort of, what we've seen without a recession.
It's cost string. When the good times are good, they're good. When the bad times are bad, they're bad, I guess. Rarely, I think the market runs sideways, right? I mean, we've seen it before for a year or two happen where we don't get much movement, but usually we're up or down.
I mean, and not all recessions are as bad. 08, 09 was significant. It was very, very significant. But you go back to like 1990, that was no one's writing books about the 1990 recession. That's
Yeah.
just not happening. It's
I can name at
so.
least 3 great movies from the 2008 recession.
Oh, hang on, wait. They'll be. Oh. Well, The Big Short, Margin Call. What's the other one you have?
Um, what was the documentary that they did? It was an actual.
Smartest Guys in the Room. Was it?
Yeah. Smartest guys in the room. Or no, sorry, Too Big to Fail. I
Too Big to
remember
Fail. Okay.
watching. That's how I got introduced into everything. I think Paul Giamatti was in that. Um, I think we watched that my senior year in like my economics class.
So I'm looking at recessions, July 1st, 1990 through March 31st of 91. And the markets actually went up during that time. They went down into the recession, but they went up over that recession. And then you have one 330 of 01 through 1130 of 01. So that's 8 months. And in that one, the markets were going down, although they kind of bottomed, around September 28th of 01 after 9/11. So, yeah, I mean, literally the recession, the official recession in 2020 was February 1st through April 30th. Like that was it. So we just
I
haven't had a period where we've had a long drawn out. We had a bear market. We didn't have a recession. We had a bear market, 22, right? So,
Yep.
all right, let's move along. Or do we? Okay. Eric Baltunis on Bloomberg. He's their senior ETF strategist. He puts out a lot of stuff on ETFs. He's written a couple of books. So there's this ETF, XOVR, X-Ray Oscar Victory Roger. And if you look at the inflows, they now have about 1.3 billion. Yeah, 1.3 billion in assets. But I mean, they had less than 400 million. I mean, midway through December. And he wrote an article on it, and I'll kind of quote from him. Investors are increasingly piling into a little known ETF with the ticker XOVR because it has a small investment in SpaceX, which is reported to be preparing for what could be the largest IPO of all time in 2026 with a valuation that might reach 1.5 trillion. Yep, it's sent over investment, so flows over $1 billion. And the space. Yep. Okay. And then he also makes the point that Kathy Wood, I think, has a venture ETF and she holds it. And then there's another ETF. He doesn't give the symbols here. Who is this? Ron Barron. He says investors eager for SpaceX exposure ahead of its potential blockbuster IPO are piling into an obscure ETF with only a sliver of exposure to Elon Musk's rocket company, passing over Ron Barron and Kathy Wood. I'm not familiar with Ron Barron's fund. And the far larger stakes they already offer. So assets have tripled, even though SpaceX only accounts for 4% of the portfolio. So, like, I haven't done any analysis to see like the valuations on any of this stuff, but
I was hoping you knew if this was trading at a discount or you know overpriced relative to its
Yeah, well, I mean,
ownership. And yeah, I mean, you could try to calculate that out, couldn't you?
well, sure. I mean, if I had more time, I saw this afternoon, so maybe over the weekend I'll do that. I'll do a little evaluation on it. But you've got to make an assumption on what SpaceX is going to come out at,
Right.
and so I just wonder though, is this one of those things where it's so obvious? Like it's obvious why people are coming into this. It's obvious what people think it will do by owning it, and yeah, I mean, is this overvalued, undervalued? Well, no, we know, but so it's
Why I don't. What am I missing here? Why are they piling into this over Barron and Woods funds that have a higher?
yeah. Eric Baltunis, I did click through the Bloomberg article, and he thinks it's the wrapper. The wrapper meaning an ETF is
Yeah.
much more popular now as opposed to buying a mutual fund.
Okay.
Yep. I don't know which one's better. I don't know if any of them are good or bad, but if I mean, it's a way to, I guess, get exposure to SpaceX and other stuff. So
It looks like
yeah,
the
I don't
top
know.
holding in this XOVR is NVIDIA.
Oh, is it? Okay.
Yeah. NVIDIA, Meta, Maple Bear.
Yeah, that sounds like something you would know, Shane. That
That's
would
that's
I'm kidding.
come on. Come on. I mean, just so you know too, the only company reporting earnings next week on Tuesday, um, it's a citrus company. They
All
do they
right.
do they do limes. So I
So let's we got to talk about that. I'm just going to XOVR, and we don't need to spend any more time on this. So yeah, so somebody had put that out on Twitter, Shane, and it was like, did they not get the memo that it was Christmas week? So
I
what company is this?
some poor
There's one
intern.
company reporting
Yeah.
earnings next week.
Limonera. They do. Let me see here. I believe it's. They said like citrus and fruit. Yeah.
Okay, I got to look it up on Bloomberg
Production,
now.
sales, and marketing of citrus and avocados. There it is. And
Oh,
real
okay.
estate holdings, vast water rights, agribusiness, rental operations, and real estate development. Good for them.
It says real estate properties and water rights in California, Arizona, Chile, and Argentina. Founded in
Portuguese for
1893,
yeah,
right?
1893. Portuguese for lemon tree. Nice.
LMNR is the ticker. Uh, let's see. Let me look at their financials.
My son loves avocados, so
I do too, actually. Avocados is almost deciding when to open an avocado is almost like trying to be a discretionary trader. You open it
yeah,
too soon, like buying it too soon, you
you're
buy it,
gonna
you
ruin it.
open it the wrong time. You open it too
Yeah.
late, you're late. Let's see. I guess I can do this. EEO. All right, I'm looking at the consensus overview on how do you say this? Limon. Well,
Limonera.
okay, limonera. So isn't Spanish like limon isn't that a Spanish word?
I believe so. I should know.
All right, let me look at the estimates for annuals. So EPS adjusted, the fiscal year 25. Oh no, they're expected, analysts say, minus 0.447 cents a share.
Oh,
Uh,
tough.
but a gain of 3 cents in 26, according to analyst expectations, and 31.5 cents in 27. So we'll be watching this one, and they have the stage to themselves on Tuesday after the close. So good luck to that company. Now we know who they are. Shane, this one's for you. Talking about Japan. So Japan's 10-year Treasury bond, the JGB 10-year, had a yield of over 2% for the first time since I think this is since like 98. If I'm looking, I think it kind of,
I
yeah, it's
was
higher than it
one.
was in 98.
I was 1 year. I was the same age basically as my kid.
It's coming
The
all
last
full
time
circle here.
that's pretty incredible. So, um, yeah,
Well,
yeah,
you're making the point, Shane, that why
it's a
haven't we heard
generational
about this?
thing. Yeah, yeah.
No, but
It's
you're saying like, why haven't we heard? Like, why isn't this making more news? Why isn't it causing a problem? Right?
I don't even necessarily think it's a problem that it has to cause. It's just, to me, I think this will be something if these continue to move higher over the next 5 to 10 years, depending on how they do this. What happens, even if it's just a couple years, this is pretty monumental. Almost 20 years, right? That's big. So
Mike, if you look at the chart of the Nikkei index, Nikkei 225, which is the blue line in that chart you're looking at, our audience, of course, can't see it. And Japan's market, after hitting kind of like an '08 low, then they sort of went nowhere into 2012. It has been rising since 2012. It is now higher than the old peak in '89. And look, Japan has tried low rates for years. Hasn't really helped the economy. I'm not sure. I know they do a lot of currency controls because they want to kind of manage the Japanese yen. But like Mike, you look at this chart and it took a while, but man, that was a long basing period for the Nikkei 225.
Yeah, it took until almost 2015 to get back to even from 2008. And then it really didn't do much for a few years even after that. But this recent rally here, sort of, leading the rise in rates, the market has seemed to like it.
The funny thing is, Mike, you look at the '89 high, and this is a quarterly chart. So Q4 of '89, it's just under what 40,000. And in technical analysis, you say like, oh, the old holders have a memory, so that old high is resistance. Like, I don't actually know if the old holders from '89 were like, oh, if I just get back to break even, I'll sell. But it is interesting. It actually came up against that level, retraced, and then it's gone higher. So, Mike, are you all in on uh, Japanese equities in 26? Is that your play?
Not my play. Maybe a
Okay.
sliver in a diversified portfolio, but
There you go. Good, smart. Yep. Like that. Yeah, you probably have this in what, EFA, right?
yeah, exactly.
Yeah. If you it the Shane, how about you? Are you with Warren? Didn't Warren Buffett wasn't he the one who was buying Japanese equities when nobody else was?
I think so. I at the end of the day, I think that again, this is something historical or monumental. So, in a well balanced, well diversified portfolio, probably not a horrible idea if you're in it for the long run to have some exposure to that. We'll see.
I love how you guys are taking the compliance line, like, well diversified.
Oh, we got to.
Like, oh, you're being boring. Yeah. All right. Look,
You want us to say we're all in?
no.
I got 10 individual Japanese stocks I can list right now that no.
Yeah, give us your number one. No, I'm kidding. So, yeah, but Mike, to your point, if you own international, like you own this. You
Yeah.
own, like EFA is developed, MSCI, EFA ETF, like that's the ex-US developed markets. And
Underperformed for years, and this year it's done quite well, up almost 30% year to date.
And that's
yeah.
the drag that you'll get on some things like that. We've talked about the concept of like the all weather stuff, right, recently. And it's
Mm-hmm.
that idea that like you'll get these areas of the market that they just drag for who knows how long, and then all of a sudden one year they wake up, and it's like you're better to hold that long term and have a little bit there when it does wake up than to just completely ignore it in some instances, right?
Well, I got to. This has been a widowmaker for a long time because a lot of people in our business have said you need to have international stocks, and trust me, at some point they'll have their day. The U.S. has been outperforming for a very, very long time, but yeah, I mean we've gone over it. Poland, Germany, some of these just individual markets, all time highs. Like this stuff worked this year.
But so did a lot of things. That's the other thing we've pointed to is it's been a
But this
really
didn't work when the U.S. markets worked. In
right.
fairness, this isn't like everything went up, so you know yeah, like if you weren't mad if you didn't own this and you own the U.S. markets, you still made money this
Exactly.
year. So,
So
Mike, I'm looking at the holdings in IFA.
Mm-hmm.
So Toyota's in there, Mitsubishi, Sony. So yeah, it's got some
Japan
Hitachi.
is the largest allocation country
Oh, what?
wise,
Oh, is it?
22.5%.
Yeah, there you go. So if you own this, you had Japan. See that? This is why you buy index funds and you just let the index funds do the work. So Nestle, number 5 in there.
I really hope you mentioned Toyota. I really hope they lift the ban on small vehicles in the U.S. It's circulating. They might do it. If they did, I think they've got like a compact truck, flatbed, like just classic shotgun and driver's side, and maybe a lap belt in the middle. But it's like they go for like $12,000 overseas. It's so affordable. Um, just a little utility truck. I think that'd be awesome.
Yeah,
See,
there's
that's another
certain.
thing. Trade. That there's been so much stuff going on about trade, right? And seems like global markets have benefited, and so have U.S. It's like I don't know. It's been a really interesting year, performance-wise across the board.
All right. You know what else is interesting? Our recommendations to the audience. They can't wait for it. They love it. Mike, let's go to you first.
I'm going to go with college football playoffs this weekend.
Mm, yeah.
Love college football. I mean, NFL is great
You
too.
realize though, by the time people listen to
Oh,
this,
I
they
did
will
this
have been over.
again. This is the
Yeah,
second time I've done this.
so.
Well, I
Thank
hope
you for
everyone
telling us.
enjoyed
But
the college football playoffs last weekend.
I mean, Sunday is when this will come out. So
Okay. Well, hopefully you enjoyed it.
hopefully it was everything you wanted. So yeah, like what is it? Oklahoma tonight. We're recording this on a Friday. Oklahoma, Alabama is tonight, right?
Yeah, so I went to Indiana, which is having a historic season football
I've
wise.
seen
Historically,
that. Yeah.
the worst college football program of all time by losses, not just in opinion, but by stats. So the winner of that Oklahoma Alabama game will be playing Indiana in the Rose Bowl. So I'll be watching that one closely.
And your guy won the Heisman, right?
He won
Your
the
quarterback.
Heisman. Yep, unbelievable.
Is he the only Indiana football player ever to win the Heisman?
Yes.
Yeah, that was. Yeah, I mean that's something. He'll probably be. Well, I guess it depends who has the number one pick in the NFL or somebody trades up, but he's probably going one.
I think he'll
If
be the
he's a really
first
good quarterback.
quarterback at least. Yeah.
Yeah. Um. All right. What was it? Didn't you give a recommendation last week? Something you were watching? You pre-recommended it.
I'm
Must
in
not have
the
been good.
I'm in the middle of I don't know. I'm
It's that
forgetting.
good, huh?
I'm forgetting. No, it is good. I just haven't finished it. Once I finish it, I'll come back and
Okay.
close that loop.
Well, if you can remember what it is, let us know. Shane, what about you?
I gotta go. I'll save the best for last, but my wife convinced me to watch House of Gucci. I've never been one for like
Hmm.
fashion or anything like that. Surprisingly great acting by a surprisingly great cast, and I didn't realize how, I guess, like I don't know, controversial and crazy that whole story was with how Gucci was came about and what got it where it is today, and the essentially transfer of ownership and what happened. So it was actually pretty interesting for sort of a crime drama thriller. Um, but also Good Will Hunting, got that one done last night. Top 10 for sure. Just incredible story.
Yeah,
Could go on and on about
it's
it.
actually been fun with you, Shane, because I've been giving you, and Mike's been giving you too, movie recommendations, and you had never seen Good Will Hunting before. I'm like, you got to watch that. So you saw Argo. I think we gave you Argo too. You like that
Yep.
one?
Yep.
There's been a couple. Have you seen Shawshank Redemption?
I actually read that one before I saw it. I read a lot of Stephen King growing up, and that one, and I'm sure you've seen Stand By Me, which was actually titled The Body when he wrote it. But
Mm-hmm.
yeah, Stand By Me, Shawshank, and Stand By Me are two of my favorites as
Yeah,
well.
Shawshank wasn't that a short story?
It was.
Yeah.
So is The Body. They were like
Yeah.
maybe like 100 pages. So
I think The Stand was one of my favorite books I've ever read, and I haven't read a lot of Stephen King, but that's what 1,500 pages.
oh yeah, that's the one I haven't. That and I haven't gotten through it yet. The Green Mile is another one. Most people don't realize that's another Stephen King one. And the Green Mile, story wise, is just it's a great story. I'll mention it. We watched Here with Tom Hanks. It's that movie that's shot from one position throughout essentially what they say the dawn of time, right, for Earth. And it basically just shows the progression of life from a World War II recent veteran and his wife in the 40s buying a house, raising a family in it. One of the kids in the family takes the house, right? And you just see the evolution of generations of a family through it. I thought some of it was okay, some of it a little corny. At the end of the day, though, it was a good observation on life and family and stuff like that. So I got
All
3
right.
in.
Well, you'll have to read The Stand, by the way, because that's an epic book, and it's different, I think, from a lot of his. Like, it's not a horror one.
Oh no, that's what I've heard.
Yeah.
My dad said the same thing. So
Yeah, it's so, and get the extended version. So I guess when he first published it, his publisher's like, you can't publish it this big of a book, and when they redid it, it's got the extended stuff in it, and I read the extended. So there you
nice.
go. Mike, did you remember what you were watching?
Something with Claire Danes.
Oh, right. Not House of something. No. All right. Well, people can Google it.
Yeah.
You can tell us next week what it
The
is.
Beast in Me.
Yes, thank
the
you.
Beast in Me. Gotcha.
All right. So that's good. I don't have anything new this week. I finished watching Survivor. You can make fun of me because I still watch that show, but yes, I do.
I watch it.
Oh, you do? Okay.
Yeah.
It's game theory. There's a little bit of game theory in there. So what I do though is I tape all the episodes, and then towards the end of the season, I start to watch it. So I don't have to wait week after week. So there you go. All right, that's it. I think we solved everything, and we'll be back next week. Yeah, we'll do a show next week. We'll just have to figure out when we're going to tape it. For everyone else, have a good week, and hope you really enjoyed the college football playoff if you've already watched that. And Mike, I think your other recommendation was what, the 2008 Rose Bowl? I think you recommended that too.
It was 03, but yeah.
Okay. All right. See you, everyone.